Trying to keep up with crypto and NFTs, it can feel like, well, like trying to drink from a fire hose sometimes.
Absolutely. It's relentless. One minute it's a price surge, the next.
Exactly. A DeFi exploit or some new NFT thing everyone's talking about. Well, this is the deep dive, and we're here to maybe turn down that fire hose pressure a bit for you.
Good plan. We've been digging into the nifty noon reports from May 19th through to the 23rd, 2025.
And it was a packed week looking at these sources. Really quite something.
Oh, definitely. It's a great snapshot of, well, everything happening. We've got Bitcoin's big moves, some pretty crucial regulatory stuff.
Stablecoins, of course.
Yep, and a pretty major DeFi security issue, plus the usual NFT market ups and downs.
Right. So our mission for you today, it's pretty straightforward. We want to pull out the important signals from all that noise.
Give you a clear picture of what actually mattered that week and maybe why it matters going forward.
Exactly. So let's just dive in, shall we? And I guess the obvious place to start is Bitcoin. Wow, it really climbed.
It certainly did. That was the big headline, really. Bitcoin hitting a new all-time high, pushing past $110,000. Wow. Nifty Noon specifically mentioned the May 21st UTC close. That was $106,830. A record daily close at the time, which sort of paved the way.
Okay, so hitting new records, but it wasn't just random optimism, right? What did Nifty Noon say was driving this?
They pointed to a few key things. First off, what they called relentless demand from the U.S. spot Bitcoin ETFs.
Ah, the ETFs again.
Yeah, apparently they were just soaking up Bitcoin supply faster than miners can produce it, even after the halving.
Right.
They specifically mentioned BlackRock's IBT, huge inflows, over $9 billion year to date.
Yep.
Put it in the top 5 ETFs overall for flows, which is pretty major.
So serious institutional money pouring in, basically changing the supply-demand picture.
Seems like it. Then second, Nifty Noon highlighted this notable shift in U.S. policy vibes towards crypto.
Okay.
Specifically, the surprising progress on the Genius Act. We'll get into that more in a minute, but that definitely helped the mood.
Interesting. So institutional cash and maybe friendlier regulation. What else?
Well, the third thing was Bitcoin getting looked at again as an inflation hedge.
Right, that narrative keeps popping up.
Yeah, linked to, growing concerns over the fiscal health of major economies. Nifty Noon actually mentioned Moody's stripping the U.S. government of its top credit rating back on May 19th.
Ah, okay. So that probably fanned the flames of those inflation worries.
Could well have done. Boosted Bitcoin's appeal as, an alternative store of value.
Makes sense. So with all this going on, how are investors actually behaving? Was it just wild speculation or something else?
Nifty Noon pointed to a couple of interesting signs. One was the Coinbase Bitcoin Premium Index staying persistently positive.
Meaning more buying pressure from the U.S.
Basically, yeah. Sustained U.S. buying. And they also use CryptoQuant data showing growing demand from large investors or whales.
The big holders.
Exactly. Their holdings were apparently getting close to record highs. So the takeaway seemed to be conviction from these bigger players, not just, short-term hype.
That's a really important difference, conviction over hype, and technically any specific levels or market stuff Nifty Noon mentioned.
Yeah, they talked about that $110,000 level being significant, and also this significant negative gamma exposure for dealers in the options market around there.
Negative gamma. Okay. Remind me what that means again?
Think of it like this. If the price moves sharply upwards past $110, dealers who sold options might be forced to buy Bitcoin themselves to hedge their positions.
Which pushes the price up even more.
Exactly. It kind of amplify the move, like pouring fuel on the fire, potentially accelerating the rally.
Got it. Okay, so Bitcoin's massive run fueled by ETFs, regulation hopes, inflation worries, and big money conviction. Let's switch to that regulation piece you mentioned, the Genius Act. That sounds like a pretty big deal.
It really was. The Nifty Noon reports definitely emphasized how unexpected its progress was. Specifically, passing that key procedural vote, the cloture vote, in the Senate on May 19th.
And the vote count was?
66-32. Pretty solid margin, actually.
Unexpected is the word, right? Didn't it fail before that?
It did, yeah. Less than 2 weeks earlier. Nifty Noon said the turnaround was down to a couple of things. First, intense last-minute negotiations.
Oh, the usual.
Which led to a revised draft, apparently with some changes. Enough to get several key Democrats who'd voted no before to flip their votes. Even some original co-sponsors.
Wow. Okay, so some serious deal-making behind the scenes. Anything else driving it?
The other big factor mentioned was a major push from crypto industry lobbying.
Ah, okay.
Especially big players like Coinbase, reportedly stepping up their efforts. The concern was if this bill failed, It could stall any meaningful crypto law for the rest of the year.
Right, so high stakes for the industry. And if this Genius Act actually becomes law, what's the expected impact?
Nifty Noon said it's widely anticipated to unlock substantial institutional investment into the crypto sector.
Okay.
The thinking is clearer rules around stablecoins give big institutions more confidence to jump in.
That could definitely be a game changer. But was everyone happy about it?
Uh,
Any criticisms or red flags raised?
oh yeah, definitely not universal praise.
Yeah.
Senator Elizabeth Warren was still a vocal critic, calling the revised bill weak.
Okay.
And there were reports pointing out potential loopholes, things about big tech's involvement, and even possibility of the president and vice president being able to issue stablecoins. That last one was a sticking point before.
Okay. So progress, but maybe still some wrinkles to iron out.
Oh.
All right, let's shift from potential rules to a major player dealing with the current situation. Circle. Nifty Noon suggests they're kind of at a crossroads.
That's a good way to put it.
Yeah.
Circle, the company behind USDC stablecoin, they're reportedly looking at two main paths. An IPO, they filed initial paperwork for that back in early April. Or potentially being bought out by someone big like Coinbase or Ripple.
Right. Go public or get acquired. Big choices. What kind of money are we talking about? What's the valuation target?
The figure floating around is at least $5 billion. That seems to be the target for the IPO and also the kind of ballpark for acquisition talks.
5 billion. Okay. Let's talk potential buyers. Coinbase comes up a lot, right? Why are they seen as such a natural fit?
Well, Nifty Noon calls them the most logical acquirer. They've got deep ties already, right?
Yeah.
They co-launched USDC way back when, and there's a revenue sharing deal that apparently really favors Coinbase.
Ah, okay.
One source even apparently said something like, if Coinbase wanted to buy them, Circle would sell in a heartbeat. Plus, Coinbase has cash, around $8 billion, and being public, they can raise more if needed.
That history definitely makes sense. What about Ripple? They were mentioned too.
Yeah, reports said Ripple made a bid, maybe $4 to $5 billion, but Circle supposedly turned it down as too low. But Ripple has that massive stash of XRP, right?
Yeah.
Over $100 billion worth, potentially. They could maybe use that somehow to sweeten a deal.
Interesting angle. So, strong interest from both. Why wouldn't Circle just push ahead with the IPO then? Why entertain these offers?
Well, the IPO market is apparently looking a bit better. Nifty Noon mentioned eToro going public recently.
Right.
And that potentially improving U.S. regulation we just talked about, that probably boosts Circle's confidence in an IPO too.
Right.
But, getting bought by Coinbase or Ripple at a good price, that's faster, maybe less risky than the whole IPO process. It's a strategic calculation for them, balancing potential IPO upside against the certainty of a big sale.
Yeah, tough call. Okay, let's pivot again. From strategy to security, or lack thereof. That Cetus protocol hack on Sui sounded really bad.
It was a major incident, yeah. Cetus is the biggest DEX decentralized exchange on the Sui network, which is a layer 1 blockchain.
And the damage was?
Around $220 to $223 million lost. Happened on May 22nd. Just a huge amount.
Ouch. How did the attackers manage that?
The reports say they used spoof tokens, basically fake tokens. They used these to manipulate the price curves inside the DX.
To make fake stuff look valuable.
Exactly. And then use that to drain the real valuable assets out of the protocol's liquidity pools.
Man. And I bet the market reacted instantly.
Oh, yeah. The Cetus token itself dropped like 40%. And other tokens just built on Sui, they crashed too. A real shock to that ecosystem.
So what did Cetus and Sui do? Could they do anything?
Well, the Cetus team quickly paused their contracts, stopped withdrawals, and then the Sui Foundation and the network validators worked together to try and freeze about $162 million of the stolen funds that were still on the Sui network.
Okay, freezing funds sounds good for the victims, but I remember reading that caused some controversy.
It did, yeah. Big debate. Because a relatively small number of validators were able to coordinate and essentially block transactions linked to the hacker.
Which raises questions about decentralization.
Exactly. Critics jumped on it saying, hang on, if a few validators can just freeze funds, how decentralized or censorship-resistant is Sui really?
Yeah.
It highlights that classic tension, right? Security versus core blockchain principles.
Absolutely. And did the hackers get away with anything?
Yeah, unfortunately. Reports said at least $63 million was already breached over to Ethereum before the freeze could happen.
Wow. So a partial recovery, but still huge losses and a big debate sparked. What about other protocols on Sui?
Some others, like Scallop, apparently paused their services temporarily too, just as a precaution. Shows the ripple effect.
Yeah, it definitely underscores the risks in DeFi. Okay, the reports also mention some, let's say, innovative stuff happening in DeFi too, right? Believe app and Launchcoin. Sounded pretty wild.
It was certainly something. Believe is, or was, a meme coin launchpad on Solana. The unique thing was this X to token model.
X to token.
Yeah, you could apparently create your own crypto token just by replying to Believe's account on X, Twitter. No wallet needed initially.
Seriously, just tweet a reply and boom, new coin.
Pretty much. Super low barrier to entry. And it caught on initially. Big hype, especially around ONCH coin, which people kind of linked to Believe.
And ONCH coin went nuts, I assume.
Oh, yeah. Meteoric. Up nearly 3,000% in a week, something like 27,000% in a month. Market cap hit over $240 million at its peak. Tapped right into that whole internet capital markets idea. Easy token creation, easy trading.
Insane numbers. But did that last?
Not really, no. After a peak where Believe was doing like over 4,000 token launches a day.
4,000 a day.
Yeah, capturing over 13% of Solana Launchpad activity for a bit. But then usage dropped off pretty fast, down to maybe 900 launches a day just a few days later. And revenue went down too.
So the novelty wore off. Were there bigger problems flagged, risks?
Definitely. Apart from just the potential for endless spam tokens, this security platform, rugtech.xyz, found a really critical flaw.
Uh-oh.
Believe apparently allowed token creators to change the token's metadata, its name, symbol, website link, after it was launched in trading.
Wait, what? So you could launch a token, get people to buy it, then just change its name in detail?
Exactly. Huge potential for scams, right? Rug pull and just tweak the name slightly and try again. Major red flag.
Yikes. That sounds incredibly risky for users. So, innovative idea, but maybe fundamentally flawed.
Well, Nifty Noon suggested its long-term survival depends on fixing those risks and keeping people interested beyond the initial craziness. Trust and security are just so crucial in DeFi, That kind of vulnerability could really kill user confidence.
No kidding. Okay, let's quickly touch on the NFT market during that week. What was the general picture from Nifty Noon?
Pretty mixed, really. Lots of ups and downs across different collections. Some days you'd see captains or Bitcoin puppets or Mad Lads with good volume increases.
Okay.
Other days, big names like Bored Apes, Azuki, Pudgy Penguins, their volumes would be down. Just shows that continued volatility and how focus shifts around in the NFT space.
Still very dynamic then. Any collections consistently doing well?
CryptoPunks kept showing up consistently among the top sales by ETH volume pretty much every day covered. Shows the staying power of those early iconic projects at the high end.
Punk still holding strong. Any interesting news from specific NFT projects?
Yeah, a few things. Pudgy Penguins announced a partnership with Random House Kids. That's pretty big, could take them mainstream.
Definitely.
Magic Eden rolled out a feature called Lucky Buy on Ethereum and partnered with Spark. And OpenSea hired a global gaming ambassador.
Ah, the gaming angle. Makes sense. It seems like projects are still building and trying new things. Any specific big sales mentioned?
Yeah, lots of punks. Again, mostly in the, say, 46 to 59 ETH range. Also, a Gazers by Matt Cain piece went for over 27 ETH. So still significant money moving for those top-tier assets.
Got it. So a varied NFT scene, blue chips resilient, and ongoing development. Okay, we have covered a lot from just those few days in May 2025, looking at the Nifty Noon reports. Let's try and wrap it up with the key takeaways for you.
Sounds good. So number one, Bitcoin hit a new all-time high. Key drivers seem to be that heavy institutional buying through the spot ETFs, maybe a slightly warmer regulatory outlook thanks to the Genius Act progress, and that ongoing inflation hedge narrative.
Right. Number two, the Genius Act itself making that surprising leap forward in the Senate. Big potential implications for institutional adoption of stablecoins, though maybe still some issues to watch.
Yep. Then Circle, facing that big strategic choice. IPO or sell to Coinbase or Ripple. Reflects the maturing market, maybe.
And number four, sadly, the huge Cetus protocol hack on Sui, a stark reminder of DeFi risks, but also sparking that important debate about decentralization versus security.
And let's not forget, Believe app and Launchcoin innovation, yes, but also showing the volatility and, frankly, the dangers of some DeFi experiments if security isn't paramount.
And finally, the NFT market just kept doing its thing, fluctuating, with CryptoPunks holding firm at the top and interesting partnerships and features emerging.
It really just hammers home how fast everything moves in this space, doesn't it? Always something happening, often unpredictable.
Absolutely. And it leaves you thinking, right, about that balance between DeFi innovation and real security. How do we get that right? Or the Genius Act, if it does pass, what will the real long-term impact be on institutions? Will those reported loopholes matter?
And Bitcoin hitting these highs, While there are still big worries about the global economy, what does that really tell us about its role going forward? Is it truly becoming that digital gold or something else?
Lots to chew on. These are the narratives shaping the future, and definitely worth keeping an eye on. Thanks for joining us for this deep dive.